Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what companies are trying to hide in plain sight. Today we are digging into Ashford Hospitality Trust Incorporated's latest report and 8K filing. This report details recent business events, and frankly some of it is as dry as a desert, but we'll find the nuggets. First off, some quick context. Ashford Hospitality Trust Incorporated is a real estate investment trust. Essentially, they own hotels. Now, they recently sold a hotel, the Embassy Suites Austin in Austin, Texas. This sale happened on the 17th of February 2026. This specific hotel sale for $13.5 million in cash is part of their ongoing strategy. Selling off assets that may not be performing as well, or to raise capital, is a pretty common move for REITs. It signals a potential shift or refocusing of their portfolio. We are talking about big money changing hands here, so it is definitely worth noting. Now, the filing also mentions financial information. Let's look at some of the key details they have provided. While this particular filing is more about a specific event like the hotel sale, it does touch on financial statements. They've attached unaudited pro forma financial information. Essentially, this means they are showing us what their finances would look like after certain events have happened like this sale. It is a way for them to present a potentially more favorable financial picture. The report also lists their various classes of stock and debt. This includes common stock and several series of preferred stock like Series D Series, F Series, G Series H, and Series I. They also have preferred stock repurchase rights. This complex mix of securities tells us about their capital structure and how they fund their operations and acquisitions or dispositions. It is like a corporate family tree of financial instruments. Their common stock is traded on the New York Stock Exchange under the ticker symbol RT. This is the main way people can invest in the company. The preferred stocks also have their own tickers like 8APD for Series D and HT, PI for Series I. Understanding these different classes of stock is crucial as they have different rights and priorities, especially if the company faces financial trouble. The report is signed by Derek S.U. Banks, the Chief Financial Officer. This is standard practice for these filings. Now let's put on our analyst hats and decode what this really means. Ashford Hospitality Trust Incorporated is actively managing its asset portfolio. Selling a hotel is a strategic decision and can impact their revenue and profitability. The sale of the Embassy Suites Austin for $13.5 million is a concrete event that affects the company's balance sheet. Pro forma financials are a peek into their adjusted financial state after such transactions. Investors should always scrutinize these carefully, as they can sometimes present a slightly curated view of the company's performance. The complexity of their share structure with multiple preferred stock series suggests a history of raising capital through various means. While this provides flexibility, it can also mean significant obligations to preferred shareholders, impacting the amount of profit available to common shareholders. Looking ahead, Ashford Hospitality Trust Incorporated's strategy of asset rotation and capital management will be key. Their ability to time these sales and reinvest in more profitable or strategically aligned assets will determine their long-term success. We need to keep an eye on whether these disposals are leading to a stronger, more resilient business, or if they are a sign of underlying pressure to offload underperforming assets. The market often interprets these moves as indicators of management's confidence in the company's future direction. So what is my take on this filing? Ashford Hospitality Trust Incorporated is making moves. The hotel sale is a clear signal of portfolio management. The pro forma financials offer a glimpse into the immediate impact. The complex stock structure highlights their financing strategies. The company appears to be navigating the real estate market with active asset management. However, like any REIT, they are subject to the ups and downs of the hospitality industry, consumer travel trends, and economic conditions. The significant number of preferred stock series means they have substantial fixed obligations, which is a risk factor that could impact earnings available for common shareholders. The sale itself is a positive step if it frees up capital for better opportunities. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.